Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We do have some economic data going on today or coming out today in the form of existing home sales, and it was a bit of a pullback from what was expected. Came out with 5.35 million units versus the 5.45 million units, which was expected. We also got the CB, which is the Conference Board leading index, and it's actually should be called the lagging index because it's just a compiled index of all of the data points that we've already seen and or talked about, and it came in at not really surprising, a negative 0.2% expected to be even. So it takes into account 10 different economic indicators that we've already gotten. So that one was lower than expected as well. On to the overall markets. Crude oil cruising higher, up $1, up into 46.41 area, just above the point of control or where the most time and volume has been spent. The overall markets are celebrating the fact that the FOMC did not raise interest rates, and there was a vote 7-3 to keep interest rates where they are, and lockstep with that CB index, that showing that the overall economy is not doing great, and we've already seen that with the data points that I've talked to you guys about in these market commentaries so often. Anyway, gold futures pushing higher as the easy money is there. People are going to want to put some money into gold, and gold rebounding up $13. And as you can see yesterday after the meeting, it really just jacked higher. Onto the bonds pushing higher as interest rates remain low. Bonds will go higher. So bonds, as you can see, finally breaking out of that little range that I talked about that we were in for just about a week or so, and I was talking about it was going to remain there until the Fed doesn't do anything, and then we could likely see that push higher, which is what we are seeing right now. The bonds up over a point now, up a point and 8 ticks. Then the Nasdaq just blasting higher today, up almost 40 points right now. Again, new highs in the Nasdaq. This probably is going to continue as long as the Fed does not raise rates. The equities are going to continue to move higher, and we're starting to head into a holiday season, so a lot of people are going to be buying. That's going to be good for the overall equities as well. Right here with the E-mini S&Ps up 15 points on the day, let's call it, and again rocking higher along with the rest of the equities. The Dow Jones was up 100 points earlier. This is the breakdown of the E-mini S&Ps /ES on a 15-minute chart, up basically, let's call it 15 points. And as you can see, overnight, the market just screamed higher. This is on the meeting. This is when the Fed came out and said they were not going to raise rates. And as you can see, we basically rallied from 35 to 55, so 20 points in the E-mini S&Ps right into the close after that announcement was released. And like I said, Dow Jones up about 100 points on the day. I think it was 130 last I checked. So everybody's celebrating the fact that everybody except for, I should say, Target is celebrating the fact that the Fed did not raise rates. Target was one of the few that are in the red today in trading wise. They're still being beat up over missing their earnings. So anyway, on to what I've done. This is Colgate Palmolive, which is ticker symbol CL, and I had just recently, not too long ago, about a week or so ago, had sold the October 67.5 puts, and as you can see, I got the direction correct, yesterday with that rally really kind of brought that into the wheelhouse of 50% of my max profit. I didn't cover it just because I wanted to kind of milk some of those longs and not see Colgate-Palmolive coming off at all after the Fed announcement. And with that Fed announcement, we were going to see more volatility come out. So I kind of squeezed it for an extra day. I originally sold it for 45 cents, bought it back today for 15 cents. So that was a nice little win on that one. That's about all I've done with this volatility contraction. Haven't had a whole lot of opportunity in the market, so not really finding anything that I want to add to my portfolio that isn't already there. Other than I am going to be looking at doing some bonds. So check out tomorrow's webinar. We're going to be doing it on how to protect your portfolio with bonds. And eventually the Fed is going to start raising rates, and we need to get ahead of that, because for every 1% increase in, like, say, a 4% bond, you're going to see a decrease in value of that portfolio by almost 20%. So keep that in mind. We need to get ahead of that curve before that starts happening, lower that basis so it's not so painful when they do actually start raising rates. All right, so go to protraderstrategies.com, find out how you can take advantage of this strategy. It's going to be great for implementing some protection against interest rate increases down the road. All right, if you can't take that, take it easy.